Well, hello, traders and investors. I'm L.A. Little. This is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective. Supply and demand, folks, on the charts. That's what you're looking for. You use that to determine trend. You use that to determine timing. Certain concepts in the neoclassical model allow you to do that. How you trade them, how you use that information, that's a personal thing that has to do with risk preferences and a number of other factors. But the main idea is you want to know which way to lean, and you want to know when to do it. I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube, and it's under the channel L.A. Little. If you want to subscribe and you haven't, you just reach up in the right-hand corner. Anytime I push public content, you'll get a notification. As far as these markets, back to work. Everybody came barreling out of the pocket today off the French elections. The upset, the worst case, I should say, didn't happen. That was kind of a risk-on case. You had 3-4% gains across Europe, DAX, the CACs, and there's the SMI. That's on the Swiss exchange, not as much. So 4%, 3%, 2%. Our market's not nearly as much, but a nice pop, 1 and 1.25% across the board. Bonds go down, oil goes down, silver goes down, gold goes down. I guess that's what you would expect, and the dollar down as well. So the only other thing that was not that much talked about was China has decided to tighten credit standards and is pushing people out of positions, causing their markets to sell off. So for the most part, risk on and back to work. Buying stuff is the way it kind of sums it up. I want to show you the sectors before we go to the indexes. This is the most bullish sector I could find today. It's the XLY. It already had another nice spike higher. Today, what does it do? It finishes off an ABCD structure to the top side. There's your structure, and there's your finish of that structure. It stops in its tracks on the push higher. If we move over to some of the others here, you're going to see healthcare not really being able to do much. Utilities really just hanging at the tops. The durables, same thing, did get over a swing point high, but just struggling at the tops. XLK also gets over the swing high. 2 of them, as a matter of fact, turns bullish again, just barely. Volume expanding on all of these today, as you see. That could be either people pulling out of their short positions, or it could be real buying. And the question always is which one. My suspicion is it's more of the stop case than the real buying. Here's the XLI, gets over a couple swing points, heading up back towards the highs. XLF, same sort of thing, but way down compared to everything else. XLE can barely manage a bounce. If you look at the basic materials had a pretty good spike up under the swing point highs. And what I'm trying to get you to notice here is look how far most of these things are away from their highs. There's still a good piece to go. And not the end of the world, but still a good piece to go. Even the most bullish sector, the stocks, still not back at its highs. Transport, same thing, just barely getting going. Real estate, money comes out of the safety, and they sell off. If you look at the home builders, they struggle to get over the top and can't. And biotech barely moves. Why am I showing you all this? Well, I'm showing you that even with the rise today, what you don't have is you don't have this like just unbridled optimism that things are going to just skyrocket. And that's despite these big moves, breakouts, shall we say, on the NASDAQ and the NDX. Here's the NDX, the NASDAQ breaks out. Do notice fills or finishes an ABCD structure to the top. So that's your A to the B to the C. There's your ABCD. Maybe a little bit more to go, but it's almost done. If you look at the NASDAQ, same thing, right? Yes, it gets over, it breaks out, just blows past the tops, and that's all great. Right, but what does it do? Finishes off an ABCD structure to the top side. There's the A to the B to the C, and to the D point. Pretty much done. Why am I showing you this? Well, because what I'm trying to say is this the start of another leg up? In other words, if I pull over a weekly chart Is this what we're going to see? In other words, we saw the big push, we saw the sideways consolidation, right? And here we go again, and we're taking off, right? Another leg higher, going to continue higher. Is that what we're seeing, or is this just going to be a false breakout that gets sucked right back in? That we don't know yet, but if you look at the sectors, if you look at these two indexes, and then if you walk over to the broad S&P 500, which still hasn't even cleared the most major resistance that it has in front of it, which is right here, and which it's going to attack, but it's going to be a question is, can you get over it? Got to it today and pretty much stopped dead in its tracks. 237,698, 237,836. Almost gets to it, stops. Now, doesn't mean it can't get over it. It just means it's going to have a problem. And if you look at the volume coming in, to the last time you were at this price point, you don't see a swell of volume coming in, so it's not like there's a whole bunch of buyers just clamoring to buy. That all tells me that another leg up right now is probably not in the cards. In Neoclassical, there's some other things in particular. If we look at the MTTFs on that time frame, right, the medium-term time frame, the intermediate, 73%, not likely that that's going to start another leg up. Can it? Sure. Will it? Probably not. If you look at the small caps also still coming back to try to get to the highs. There is volume up there. I wouldn't be surprised if they get there, at least try to. And my suspicion is what you're going to see is if these do climb higher, whether it's immediately or over the next week or two, if they get up there, that's going to be their point of failure. Then I'm talking about the S&P and the Russell, while the other indexes probably churn. If you see that kind of behavior, then look out. You're coming back. You're just playing the range still. What would change my mind? Well, the main thing is that these indexes like the NDX is like tomorrow you see them just go higher. And the day after you see them go higher. By the end of the week, they end up even higher. That pulling away from this breakout area would give you a good indication that this might be something more than just a pop and then a potential drop. That's where we're at tonight. I could go over a bunch of other charts, but that's what's most important. That's what I see. Let's see how it plays out. My suspicion and my expectation is that this is still a range trade with those leading indexes. And matter of fact, those things that are leading this market higher, if you look inside of it, it's the three large cap stocks, Microsoft, actually four, Microsoft, Amazon, Google, and Apple. Those have been the leaders. Apple up about 23% this year. Google up something like 15 or 16. Microsoft up a good chunk. Amazon as well. That's what's driven this index higher and has kept this index on an upward bias, right? As it got up here, it kept trying, right? It kept making new highs. Now it's making new ones again. Those are the lead dogs. Those dogs start reporting this week, and unless somehow they've going to blow away the estimates, I don't know how they keep leading us higher and higher. That's the risk. That's the market. Have yourself a great one. See you next time. Good night.